Okay, I'm going to present a paper that in some ways is related to the presentation that you just heard. I'm going to try and motivate it by a series of charts that would perhaps explain the major dynamic changes that we have seen in the pattern of immigration across the major receiving countries, from most of the sending countries. Some of the patterns that are particularly important in the United States, and one particular property of them, the skill composition of the new migrants. So I guess the first chart that I have here is just to give you an idea of waves of immigration to the United States. They were actually very high in the late 19th century. There's a continuous decline up to about 1970. From there, we see a sharp rise in the total volume of immigration. But there's another aspect of immigration that I wanted to emphasize in particular, and I think that it came from some of the questions that were raised before, and that is that the skill composition of immigrants to the major receiving countries have actually been on the rise in the last 4 or 5 decades. This is one pattern that you see here, and I'm presenting here data from the UK, France, Australia, and Canada. The United States, of course, is also a major receiving country, as is Germany. We did not include Germany generally in the data because of the break between old Germany and new Germany after 1990s. But I'm going to also show different data for the US. So the definition of skill immigration here is those who had some college education, so 13 plus years of education. Okay, so the different colors come from 2 sources of data that we have. One of them is the World Bank, where we got most of the data. The other one comes from the Institute for Labor Studies in Germany. You know, the acronym here is IAB. They cover slightly different periods. They're not exactly identical, but all of them are based actually on the country's census. They represent about 77% of all immigration in the world. There is a third chart here that talks about the level of skill, the way it's defined here. Those with more than 13 years of education, and they're not available in the World Bank data or in the IAB data. They can't compute that. So we've taken them, I've taken them just from Ehrlich. And this is incidentally not something that is going to be included in the paper, but it is something that I prepared for the panel on the consequences of the economic and fiscal consequences of immigration at the National Academy of Science, where I'm a member. So I have to say that when I first presented these data to my colleagues, I think a lot of them were surprised. I suppose that may be surprising to maybe most Americans. Number one, that skilled immigration to the United States has been on the rise. But secondly, and that was the other important characteristic of these 4 charts, that the skill composition of these new migrants exceeds the skill composition of the native populations, because otherwise you couldn't see, you know, the charts being the way they're organized here. So there is a rise in the skill composition of migrants from these countries that, you know, far exceeds, in some cases, the skill composition in the other 4 major countries. This is not precisely going to be the pattern for the United States. So I'm going to show you a different chart for the United States. This comes from a study by Jim Smith, who used census data from the United States. And as you can see, there has been a pattern of increased skill composition of migrants relative to the US, which is, well, in the end, I think, we get to the point where the skill composition of the migrants overtakes the skill composition of the natives. It doesn't happen all the time, but the measure here is average years of education. And the distribution of migration to the United States is bimodal. We have on the one hand a very heavy component that has to do probably from Mexican and Latin American immigration, but the rest of the world, looks different in this regard. And this is documented even more clearly in the pattern over the last 2 decades where we do have census information. So what you see here is educational attainments of the foreign-born population 25 years and over by year of entry. So as we look at the pattern, the skill composition is first lower. The US is on the right, the light blue. The skill composition of migrants gradually shifts up to the point where those who came to the United States after the year 2000 have a higher percentage of those with degrees. So that's one difference between the definition of skill that I was using in the other charts and the definition of the skill here. There we talked about those with some college, at least with some college. Here we're talking about those who already have college degrees. But we see, the pattern being, quite strong also in degrees that are above college. So above MA and above and doctorate are the other colors that you see here on the side. The green, dark green relative to the light green represents the percentage of those who come to the United States with PhD degrees as opposed to the US percentage of the population. And then I also show it by world region. So here we come, I think, to the question that was asked before. The majority of high-skilled immigrants that we get in the United States comes from Asia, very dramatically so. But we do have immigration coming from Europe.
Oh, we do?
Oh, yes, absolutely we do. And in fact, it looks like, mostly the second group. There's also total Latin American, we have Mexicans, we have others. Others is a little bit of a mixed composition. So it comes from some South American countries that are not Mexico. They come, however, from Africa. They come from the Middle East. And they come from Europe, but New Europe, not Old Europe. Okay, so, this is what the others are, and it looks like overall they are even, more dramatic than those in Europe, but who come from Europe, but, still the European immigration, including now all of Europe, or of the New Europe, EU, if you wish, is the second high-skilled group of immigrants that we get in the United States. So I guess, it creates a problem. By Bob Lucas' definition, these variations call for some sort of an explanation, and that's what we call a problem in economics, like the problem of development. So I'm going to get to the paper itself and give you a little bit of an outline of what we do in this regard. So I'm going to try and present the approach, and then I'll talk about the model, And I'm going to talk about two kinds of models, as you will see later on. I'm going to talk about what happens in the model when we get to a growth equilibrium path. And I'm going to also take into account the possibility of some interaction that takes place between immigrants and natives to explain perhaps some of the composition changes that we are seeing, but other elements as well. And then I'm going to talk about the immigration surplus that comes out of all of that. There is a segment in the paper where we test some of the propositions that we come up with. And of course, I'm going to try and leave some room for concluding remarks if I have enough time to do all of that. So first of all, the approach, I have to comment that this is a tough question to answer, at least the way we're going to try and do it. The reason will have to do with the distinct property of the model that we come up with. But I should say that, in the Becker-Lucas, tradition, we're going to start exploring the reasons behind what we see and some aspects or consequences of this pattern of immigration worldwide, but as I said, increasingly so in the United States, to try and explore a human capital-based endogenous growth model to get some of the main patterns and take it from there. So the distinct property of the approach that we're using is that it treats migration flows, waves as well, and their skill composition as endogenous variables. Endogenous variable that depends on individual choices, on market forces, but not strictly on exogenous shocks like government quotas or building big walls to stop immigration altogether, which of course never works. And that's part of the motivation of the model. It doesn't work because it ignores the causal factors that are involved in immigration, why it exists in the first place. So by assuming that immigration is an endogenous variable, we are immediately saddled by a couple of things that we need to take into account. We have to have a two-country model. We can't have a single country model that involves both a destination country, we call D, and a source country, we call S. We also, in order to get to the essence of the changing patterns of skill distribution, you have to take into account at least two distinct groups of workers and corresponding families in the same countries, and the skill groups are going to be the skilled and the unskilled. And it's a human capital-based endogenous growth model, so we're going to rely on parents or households to generate fertility, to invest in the education of their offspring, to make work decisions, which of course in the end include also the choice of staying in the source country or migrating to a destination country. But the other aspect of it would be to show how different skill groups are linked through knowledge and spillover effects. In this regard, what we do here is an extension of a paper that we published in the Journal of Human Capital, the inaugural one, that dealt with the effect of endogenous growth on both growth and distribution, income distribution, over what we call in that paper the development period that links maybe a stagnant equilibrium with a growth equilibrium, the kind of issue maybe that Bob Lucas was wrestling with in his paper earlier today. Now, obviously, such an approach allows for a richer treatment of the migration problem in a general equilibrium context that accounts for interactions between both countries. And all the feedback effects that take place across the two countries. But it also creates a very complicated model in which the global general equilibrium, as you will see, ultimately has to involve 6 distinct groups of decision makers or agents from 2 distinct skill groups in the 2 countries that are comprised of both immigrants and both natives and immigrants. So altogether, if you count, you get 6. So needless to say, to solve this problem by writing out a simple model is quite complicated, and we have to resort to a number of rigid assumptions. But I think that the ultimate message that I want to bring here, and maybe that it would be a little bit of a roadmap, to follow what we do in the paper, is that first of all, when we develop a model, we've got to find out that the impact on the pattern of immigration cannot be obtained in a general fashion. It depends on the type of shock that produces it, because immigration has to be induced. It's an endogenous variable. It's not an exogenous variable. In all the literature that we see in the immigration studies, they simply take a bunch of people from outside of the United States, put them inside the United States, and then try and find out how they affect the wage rate. They don't typically ask how they affect human capital accumulation, because these are typically stagnant or static models. But they do ask about what they call the immigration surplus. In other words, is the consequence of that kind of immigration good or bad for the natives? And typically there is a positive immigration surplus, and I think that that's where the story ends, because the rest of it would depend on how big it is and what might be some of the factors that produce it. So, our model, would be giving some answers to a number of questions that I touched upon so far. First of all, explaining the skill composition of immigration and why it rises. So I think I should say that the general answer that we give to that, since I said that it depends on the type of shock that produces it, is that we focus on a particular type of shock that we call skill-biased technological shock. So it's going to be SBTS in many of the slides they're going to see here. And what we get out of that analysis is indeed an explanation of why the skill composition of migrants is rising over time, and why the shares of the skilled immigration actually overtakes the share of skilled immigrants in the native population in the major receiving countries. And as we said, we start seeing it in the United States only because of the fact that in the United States we have had historically this bimodal distribution that weighed the skill composition down. But it's changing. We're going to be also in a position to address in an analytical way how immigration affects a number of critical variables. Wages in the 2 groups, both skilled and unskilled, how it affects the distribution of income, both within and across countries, and then some new insights about the magnitude of the so-called immigration surplus. So the particular issue in this regard is that when we talk about the immigration surplus in this context, we're talking about really long-term effects, not short-term effects, because this is endogenous growth, and we're talking about all of that along of the growth equilibrium path. So it may take many generations to get there, rather than to just view the immediate consequences of immigration, because the literature stresses the fact that immigration is always supposed to reduce wages. And in fact, the argument would be that you cannot have an immigration surplus unless you reduce wages. Well, that's not going to be the case in our model. So that said, I think I'll try to describe what I call the benchmark model. And the benchmark model assumes no particular complementarity between natives and immigrants. They are related in other ways. In the more extended model, we're going to take into account the fact that it is possible that there are some complementarities between immigrants and natives by skill, separate for the skilled factors, and we're going to refer to it as diversity effects. So here's the benchmark model, and as I said, it's going to be quite rigid in many regards. So we're going to have 6 types of agents, skilled or unskilled, who are natives to destination or source countries, or are immigrants from source to destination. We're going to assume that migrants are freely mobile internationally, and skilled or unskilled agents from the sending countries by skill, are perfect substitutes to their counterparts in the destination country. We're going to assume that agents live over 2 periods, childhood and adulthood, when consumption, investment, work, and migration decisions are made. Each country has 2 sectors, and that's another thing that is important here. We are taking into account a production sector as well, unlike the earlier Becker, Murphy, and Tamura, and some of the stuff that I did on that as well. We need a production sector as well to show the benefits from immigration or skilled immigration. So we're going to divide the economy into a high-tech and a low-tech sector, each of which produces perfectly substitutable goods. And the reason for that assumption is to avoid any need to deal with trade, both within countries or across countries. That simplifies the model. And also, each one of them employs just one of the 2 skill types. The high-tech would employ the skilled. The low-tech is going to employ the unskilled, or the less skilled, if you wish. And then, finally, human capital is the only reproducible asset that's kind of more in line with Becker, Murphy, and Tamura. But I have to say that in the 2007 paper that I did with my co-author, Jin-Young Kim, also allowed for the existence of physical capital in the model. It made basically no change with respect to all the inferences that we got about both growth and distribution. That is not surprising, perhaps. But there is another aspect of human capital that we're going to emphasize in the model, maybe a lot more than it was emphasized in the human capital-based endogenous growth models. And that is that human capital is producing both private benefits and external social benefits. And they do that through knowledge spillover effects. We're going to stretch that argument perhaps a bit more than you would expect. But I think we want to bring up the element, the important element associated with the knowledge spillover effects, which essentially is the glue that ties in together all the different skill groups in a global general equilibrium situation. And labor markets are going to be also competitive in this model. So the human capital production function is something that you're all familiar with if you ever read any paper on human capital-based endogenous growth. I mean, it looks like Lucas's original, more than of what came after that, but it's perfectly consistent. The fundamental difference in what I write here is that this human capital production function is going to be both country-specific and skill-specific. The small h that you see here, of course, are the investments that parents make in their offspring as a proportion, as a percentage of total production capacity. The distinguishing issue or aspect of this particular production function is that it reflects endowed elements of diversity, as I said, skill and country specific, but that it distinguishes skill from acquired knowledge. Acquired knowledge would be the amount of human capital generated in the next generation. The skill, would have to do with a bundle of personal factors, such as ability, cognitive or non-cognitive. But also it'll capture the technology of transmitting knowledge, which are varying across countries. And that's the variation, that's the diversity that we model explicitly in the model. So the two together are critical elements of the model that we produce. And I suppose that when I talk about knowledge spillover effects, I should point out that there are at least three types of spillover effects that are affecting the model and the results that we get. They are, first of all, between generations. I suppose we have not been necessarily thinking about it this way, but the way that we write the human capital production function in a finitely lived agents is going from parents to children. So there are, in a way, implicitly some spillover effects that are produced by parents that benefits their children. And incidentally, by parents, I mean the parents' generation. And within country, I suppose the idea would be that the unskilled can learn from the skilled. Across countries, I also want to, emphasize the possibility of these type of spillover effects in the sense that they're skill specific. So the higher skilled in the receiving country and the high skill in the sending country are more related by virtue of skill, and therefore what happens in the destination country does affect does benefit the skilled elements in the sending country. And the same thing, however, would occur for the less skilled. First, I'm just giving you an overall view of the structure of these human capital or diverse human capital production functions that we have in the model. So, we are specifying them in some hierarchical model in the skilled group at the destination country, that delta is going to be equal to 1. The lambda is, of course, has to do the gamma. The gammas are supposed to be less than 1. But the level of that technological parameter that affects the creation and transmission of knowledge is higher in the destination country than in the source country by virtue of the country effects that I talked about before. And they're also higher for the higher skilled groups relative to the lower one. But this particular specification also allows for assimilation of same skill group once they arrive in the United States, because I suppose the A's were supposed to be country specific as well, so that when an immigrant from Korea comes to the United States and maybe had a technology of learning that was initially lower, or maybe still lower than that in the United States, the assimilation for that group of skilled immigrants is almost quick. We don't have to have it quick. We can allow for some differences. It doesn't make the results. But the important thing is that the children of immigrants assimilate entirely. There is a complete assimilation between kids of immigrants and natives once they are in the United States. That may sound far-fetched, but it's actually compatible with the results of another panel that works parallel to the panel that I'm in, that actually studied the pattern of assimilation. And if you paid attention, there was a big news about it that was covered in some major newspapers about the fact that the assimilation of immigrants in the population in the United States is quite high. I think that they basically support the kind of assumption that we made here for convenience. Here are the spillover effects. And the way I'm describing them is that they result from learning benefits to groups with lesser knowledge from groups with higher knowledge that depend on two critical factors: the disparity in the level of education across these groups, but also in their relative population sizes. So if there are more teachers than students in this context, the spillover effects are going to be a little higher. Okay. Now I have goods production in the economy that depends on all the assumptions that I made so far, but another important aspect of it is that it also contains some external effects a la Lucas that had to do with the fact that the average level of education of workers has a distinct and separate effect, makes contribution to the productivity of producing the different goods. So out of that, we can derive the wage rates, then include the different external effects that this particular formulation includes. And what are they? I guess if the two groups are perfect substitutes in production, then production could be subject to constant returns to scale in the aggregate of both natives and immigrants. But we want to give rise to a particular negative external effect that results simply from rising quantity of migrants as opposed to quality of migrants. So that is essentially what's included in that total external effect in production. While quantity of migrants reduce wages, the other element of it has to do with the quality of migrants. And if the quality of migrants is rising over time, as the charts that I showed you indicate, and especially if they rise relative to the skill composition of the native population, then there is a positive net human capital formation in the destination country. There could be the reverse in the sending country, but the two countries are also connected by spillover effects. So in a growth equilibrium path, they're going to be benefiting, the sending countries are going to be benefiting from what is happening in the receiving countries as well. I won't say much about preferences because I think that you're all, those who know the literature are entirely familiar with it. So parents are altruistic and they love children. They love the quality of children even more than the quantity of children, otherwise we can't have an equilibrium. But they enjoy particular benefits from the education that they help instill or transmit or build in their students and in their offspring. And this is what this structure conveys. We have to have a population dynamic equation to this model as well, and Bob Lucas had the same thing this morning, so the bottom line would seem familiar as well. So we go through model solutions that I don't want to really dwell on very much, except to say that in this particular structure, actually investment in human capital has an explicit solution, regardless of the type of utility function that we're working with. This is not true for fertility. We cannot get an explicit solution for fertility here. We do get a general, however, closed form solution for fertility, but if the utility function is a logarithmic one, we actually get an explicit solution for fertility as well. That helps me get into one of the critical issues in the paper, and that is what the equilibrium immigration pattern looks like, on which almost everything else is going to be built. So as I said, it cannot be derived in any closed form solution with a general utility function, and that's the main reason that we're going to solve the problem by numerical analysis. We can't do that analytically. But in the specific case where the utility function is logarithmic, we can get equation 18a, which is fairly simple. I mean, you basically get an equality between the wage rates per unit of human capital, I should say, because I'm talking about effective labor rather than labor itself. They're going to be equalized subject to an immigration tax, which is the tau. It costs a great deal to migrate from S to D in many respects. You can't fully transfer maybe the skill that you acquired in your home country, so you have an opportunity cost in this regard. It can be amended or ameliorated over time, both for the first generation and especially the second generation. But these are the elements that I think are clear and intuitive in the general solution. This is not so simple because it depends then in that particular specification on the way that parents project the increase in the wage rate of their children. In the steady state, they can base it on what happened in their own generation, but after a shock takes place, the question is how they factor it into it, and we're going to assume for simplicity that they factor it on the same basis, that their experience is going to be translated to their children's experience, and this is how we get in the utility function that takes into account the benefits to parents, the altruistic benefits that they have, part of which depends on the full income that they generate for their children when they decide to move from the source to the destination country. Okay, we get a bunch of propositions here. First of all, and I guess they're trivial, so I can cover them quickly. The first proposition is that at least under the log utility function, we have a unique solution. And the unique solution would allow for immigration to be a steady state variable. It'll never go to zero. It doesn't depend on any type of shock that produces it if the model is correct. The proposition, the second one, would be that a rise in the human capital stocks of specific skill groups in destination will increase the flow of migrants from the source country. Both propositions, I should say, because I'm probably not going to have enough time to cover it, they have been tested by us and found to be consistent with a comprehensive World Bank panel on immigration that involves 5 receiving countries from 190 sending countries. So actually this is what prompted our interest in just going and exploring the actual data in the different countries, and we were surprised to find out that the result that we got, namely that a skill-biased technological shock would increase the composition of migrants and allow the skill composition of migrants to overtake that of the natives, comes out of our model, and then we looked at the data, at least the data are compatible with it, which says only one thing, that probably the wave or the change of the flow that we are observing now, with these properties of migration, comes from a skill-biased technological shock. Maybe something like the IT, revolution, but probably going back to where Daron, got in his own paper on health or the relevance of health, where he thinks that one of the big shocks actually took place in the 40s, with some huge, significant medical advances. It could come from there as well. But theoretically, it is based on this kind of skill-biased composition. We do have, however, to impose some restrictions on the parameters in the model in order to get a growth equilibrium path. And they are, as we know from the models of endogenous growth, we have to have a minimum level of educational investment that parents make in their children to get a growth effect. We now translate it into the determinants of the investment in human capital that has to do with the ratios that we have here between the A and the theta that we have, the theta having to do with the productivity in goods producing rather than, it's the price of the financial cost of investment in education. So these things have to be the same, the ratios have to be the same across skill groups and across countries. The same goes for the technological parameters in the production function. The one thing that we need to insist on in this model is that the cost of bearing children is higher in the destination countries relative to the poor countries. Presumably, essentially because of the level of development in the destination countries, especially the opportunity cost for women. That's the implicit story. So imposing these conditions that also recognize when growth is going to take place, we do get a stable, steady state global equilibrium with the following properties: that population and human capital attainments rise by the same proportion within and across countries. I spelled them out. But the steady state fertility rates remain higher in the source relative to the destination country. So this, along with the last property, that there is a constant and persisting fraction of each skill group migrating from S to D, they remain as a steady state solutions, along with the higher property in the sending country. And that's obvious because the sending country sends its people across the oceans or the borders, as the case may be, to the receiving country. And it actually continues to produce a higher rate of fertility, not population growth. In the end, in the steady state, the ratio of population in both receiving and sending countries has got to be maintained the same. The growth rates in population and the growth rates in human capital formation and in per capita income have to be stable and similar. Otherwise, we don't have a balanced growth equilibrium. So I guess the next stage would be to look at the comparative statics or comparative dynamics that we have here. And as I said, I think we put the greatest emphasis on an equiproportional rise in the knowledge production technology in both the destination and source country. Remember, this kind of a shock affects only the skilled groups in both countries, not the unskilled groups. So there is a lag in the unskilled group adjusting to that particular shock. And this is what we're going to see in the comparative dynamics chart that I'm going to show next. But flipping back, I'll describe to you actually what happens under a skill-biased technological shock. It raises the global growth rate. It raises the skill composition of migration and the population shares of migrants relative to natives in the destination country. But it does the opposite in the source country. It finally, and that's perhaps the most intricate thing, is that it raises the wage and human capital and therefore the full income of skilled migrants in destination to source country. That, the table that I'm going to show, that I showed just a split second before, indicates. Now, this is, of course, only for the first or the second line the second row that we have here, and the third row as well, which correspond to a skill bias technological shock. There are some other shocks that I could get. Immigration costs may change. The cost of fertility may change. And I can take that into account even further. What about the immigration waves that we're now seeing coming from the Middle East to Europe? Well, in a way, that would be the reverse of the skill bias technological shock that we have, at least two kinds. It could be just the opposite. There is a skill shock that reduces the A parts, the technological parameters that determine the productivity of knowledge creation and knowledge transfer with a collapse of the economy. It could be a total collapse. It could be a collapse in just one of them that would produce a very different type of shock with obviously very different consequences to the receiving countries. But I won't dwell on that. The next thing that I wanted to take, which is critical, and I hope that I'll have enough time to finish that if I have another 10 minutes. We focus on all of this, remember, also because we are interested in seeing how a skill bias technological shock affects the dynamic paths of the critical control and state variables that we have in the model. Not just what happens to them in the steady state, but what happens to them over the transition from one steady state to the other, where the technology shock occurred and where we're going with it. So actually we can derive two propositions that predict the effect of what the pattern that we're going to observe along the transitional dynamic paths, and that is that skill bias technological shock will gradually increase the skill composition of migrants along the transitional dynamic path, and also that the human capital level of the skilled relative to unskilled groups in each country over the transitional dynamic path leading to the balanced growth equilibrium steady states are also going to be gradually increasing, which are the two major properties of the data that I started out with. So, here are the patterns. You can see, the growth in the skill composition, the growth in actually average fertility levels rise a bit, as a result. Full income ratio of skilled to unskilled population is also rising until it approaches, of course, a new steady state. And then something that happens to the Gini coefficients. Now, the Gini coefficients, the distributional elements of the model, when you take into account the total skill bias technological shock into account, they would be rising. But the next question that I want to ask is the more interesting one. How are these patterns affected by the differential effect of immigration, which is induced? So it's part of the total effect that we're seeing in the other charts that I showed you before, but the question would be, what would be the net contribution of the induced immigration in the process on what happens to the natives in the receiving countries? So, in order to do that, we have to engage in exercises like restricting or freezing the percentage of skilled immigrants, and then after freezing them, compare the consequences on the basic endogenous variables in the model, in the following charts. Now, under restriction, there is not going to be a balanced growth equilibrium, so we can only look at that over time and see whether or not there is a difference between the consequences that we are getting under unrestricted immigration as opposed to restricted immigration. And this is what you're going to see in the charts. So, what we see here is interesting, that the net effect of immigration is to, obviously, not surprisingly, increase the skill composition of migration, and also the skill population ratio in destination from what they are. That one is, the higher charts, as you can see here, are always the unrestricted. The lower ones are with a restriction. So, which essentially implies that immigration increases both the skill composition of the flow of migration and the skill population ratio and destination. Average human capital in the level of it in destination country drops relative to what it would be with no restriction. Average wage in destination will also fall. Now that's interesting, because that means that in the long run, what we're going to get is that the pattern of immigration or skilled immigration that we get after a skill-biased technological shock is going to ultimately increase the wage level. And it's actually true both on average and for the two specific skill groups. Now that is a bit counterintuitive, because if you think about the short-run consequences, if we have more skilled migrants coming to the United States, they probably affect negatively the wages of the skilled in the United States. As we hear a little bit, from the complaints that people make that companies hire more the foreign PhDs in the United States because they can pay them lower wages. That was covered in earlier discussion that we have here. Now this is true in the short run, but in the long run, over time, and this is a pattern, a distinct one that we get, that it takes a while for the human capital formation effect that works through the production sector to benefit even the skilled overall. Because the benefit over there simply rises from the fact that the average education level of the workforce increases by virtue of the fact that the skilled immigrants have a higher ratio than the natives. They add to the average. So there are beneficial effects even to the skilled, but actually the most interesting part of it is that the group in the destination country that benefits the most from the skill-biased technological shock and from the rising skill composition of immigration that it induces are the unskilled, because they are the beneficiaries of the rising effect of the high-skilled population in the United States by virtue of the spillover effect that drives the entire system. So one thing that I wanted to mention is that in the extended model, we also allow, as I said, for interaction between natives and immigrants in the production of knowledge. And the rationale that I give for that is that diversity in backgrounds and experience can enhance complementarities, especially across workers of the same skill level who acquire their knowledge and their creativity in different countries of birth. Now, there is a new paper by Alessina and et al. That I think is just out of print. And I saw that, of course, after producing a draft of the paper, that actually indicates that this is their major finding. Major finding is that there are diversity effects, they're quite high, and they have very little to do with ethnicity, and even less to do with language. That's interesting. It has to do primarily with the country of birth of the immigrants, which is exactly what we're assuming here for convenience, and that they are somewhat higher if the origin or the source country is of higher income. That's not surprising, because it will be another natural conclusion that comes out of our model. Now, we're assuming here a particular function that introduces these diversity effects, and that's simply the ratio of the skilled migrants relative to the total population in the receiving country that includes migrants as well. This is what drives, of course, the interaction between migrants and natives. It's a little disturbing because we plotted as though it's monotonic, which is a little difficult to explain only by one thing, that if the sending country is a microcosm of the entire world, therefore it represents already the diversity in the entire world. So if you bring the migrants from that kind of a receiving country into the destination country, it'll monotonically increase the diversity effects. But the other thing that I would point out is that our model gives us a solution, a numerical solution, to what that element di actually looks like in practice, and it is about 13.3% of the total, the denominator that we see here in the ratio. And the latest data that we just got this week from the Center for Immigration Study puts it at 13.1. So we're quite close. That's just a curious result. Doesn't prove anything, that we stay in the model, but it was just curious, and so I wanted to mention it. So what does it do to the comparative dynamics that I had before? It basically just reinforces the results that we had before, with one exception, that in the source country, it enables the benefits to be higher and actually positive in the end, as we'll see from the last thing that I'm going to talk about, which is the immigration surplus. So the distinct thing about our model in this regard is that it replaces short-term static estimates by long-term dynamic estimates, that it treats immigration change as endogenous rather than an exogenous variable, that it estimates the effect of the change jointly at destination and source country, giving us an idea about equilibrium also in the sense of final or ultimate benefits. One issue that probably Bob Lucas would ask me is, how can I talk about equilibrium in this global economy if one country loses and the other one gains? Wouldn't the losing country do something to stem immigration and vice versa? I don't know. We can produce an equilibrium. Whether or not it's stable politically is another issue. But we pay attention to that also in the results that we come up with. So I won't get again to the method by which we derive these immigration surpluses, but it has to do with the same kind of decomposition that I described before. In other words, you try to estimate the immigration surplus under the following conditions. If the economy somehow freezes the ratio of skilled to unskilled migrants, which was done actually in the past in the United States with the Chinese Exclusion Act and other acts that came after that. Actually, any quota system that can be attributed to skill, like the change that we have in the 1960s, where all of a sudden the immigration policy in the United States became more supportive of immigration by family members rather than by any elements of education or skill. These are going to be captured in the estimates that we do here. So we take again the case, the overriding case as being the skill composition, and then we compute it when the skill composition is the same, when the skill migration is disallowed, when unskilled migration is disallowed, and we do that in the benchmark model as well as in the extended model that allows for diversity. Okay, I won't belabor the point, but the impact that we get here on the level of the growth path, growth equilibrium path, are quite dramatic after 15 generations. Now we take the 15 generations as an approximation for a steady state, because actually the numbers that we get on that basis are very close to the solutions that we get in the comparative dynamic effects when we can actually solve them explicitly. So there are cases in which, first of all, the magnitudes are high. There are also differences between the gain to the sending country and the receiving country. In the red color that you see here are two scenarios under which both sending and receiving countries have significant positive gains, and that is when the skilled migration is disallowed. In other words, think about the reverse, and when all immigration is disallowed. So in these two cases, both the receiving and sending countries lose, and sometimes lose big, which indicates that they will gain big if this did not happen. That's the method of computing all of that. So this is what you see in this particular chart. In the other one, we take into account another measure of the immigration skill, which is not what happens to the level of the path, but whether or not we can also translate it to an average growth rate, at least over a particular period of time, after 5 generations, 10 generations, or 15 generations. In the diversity skill, the fundamental difference is that under diversity skill, there can be a rate of growth effect, not just level effects. So the growth equilibrium paths are not just being raised up, but also the slope is changing. The growth rates are increasing as well. And so we do see, however, the same pattern when we look at the growth rates difference. And the bottom line is that we get, I guess, the maximum of growth rate effect that we get, which affects both countries under the restricted immigration as well as relative to the unrestricted one, is that the average increase in a growth rate is positive. It may not be that dramatic, about 0.36 of percentage point increases. In the diversity case, this is actually percentage point increases in the growth rate itself, which are about 0.5% in the destination country, but bigger in the source country. So these two cases are interesting in the sense that the source country has more to lose from disallowing skilled immigration to the United States, both in the benchmark model and in the extended model that allows for diversity effect. And I guess the question is where it comes from. So in the model, it's easy, to see the reasons for that. First of all, they have higher population, higher fertility rates. So the only way that we can ultimately get a constant population growth in both countries is that some of the people in the source country migrate to the destination country. But it primarily follows from the fact that the higher human capital formation that's driven by the skilled groups in the United States ultimately benefits the source country as well. And the benefits to the source country, the combined benefits to the source country in this particular exercise exceed those in the United States. What that means in connection with policy implication that we have here is that they're pretty much in line with some of the ideas that Gary Becker had about how to deal with the immigration problem, and that is that skill composition in the end, allowing for the skill composition to grow even by itself, would benefit both countries. But the other idea is that in order to get these positive results, you don't necessarily need government intervention. They happen in a free market as well. Thanks.